If you look at the Shanghai Auto Show, there's literally every tech company in China coming up with an EV. Some of them are partnering up with local competitors, and they're releasing models fairly soon, some less than a year away. And so the competition that's coming has created a lot of anxiety among investors. And this is translating into fairly weak stock sentiment.
Welcome back, friends, for one more update from the world of EV stocks. In case you're new to this channel, please do consider subscribing. And if you live in the United States, you can get 2 free shares worth up to $1,850 just by following the link in the description. Now enjoy the rest of the video.
Although NIO as a company appears to be doing everything right, these have been very difficult times for the NIO stock. Of course, it's not just a problem specific to NIO, but to the entire space of electric vehicle stocks. One explanation we've always had is the fear of inflation and rising bond yields. And then, a bit more recently, a lot of retail investors have woken up to the crazy bull run taking place in crypto. The crypto market goes through massive bull runs once every 4 years, and so far, it looks like 2021 will just be another massive year for crypto. This has enticed a lot of young retail investors to either not put fresh money into stocks, or even worse, pull money out of stocks and put into crypto. We believe, however, that the crypto bull run will eventually end at some point later this year, and then we may finally see a lot of money moving from crypto back into stocks again. More specific to NIO, there's also another factor which might be impacting the NIO stock. That is the fear of competition in the domestic Chinese market. We believe, though there are indeed many new players coming up in the Chinese EV space, NIO is way ahead of most of its competition already. NIO will always keep the first mover's advantage in the Chinese market going into the next few years.
We have you on because we want to get your take on this crush. And Gabe, I think the key question here is what has changed? Has anything really changed aside from maybe the interest rate backdrop to this? For instance, let's take QuantumScape, which reports after the bell today, and you cover that stock. It's down 77% from its highs. Should the stock ever have been at those highs? What is behind this decline?
Hey, Melissa. It's certainly a good question. I think you could argue the EV complex overall year to date has certainly had a tough year. The basket of charging and battery stocks are down 30 to 40, 60% plus year to date versus the S&P up 10 to 12%. I think there's just a lot of enthusiasm that's come out of the stocks this year. There's overall plaguing the auto industry, the chip shortage. You have an increase in commodity prices like copper, steel, aluminum that could potentially put pressure on the margin side. And these stories always were longer dated investment cases that really take hold over the middle part of the decade and beyond. And so, which could be beyond anyone's realistic investment time horizon. So I think you're seeing a lot of that enthusiasm come out of it. But like we've said recently, we think the longer term stories are largely intact. In March, EV sales were highest on record. And in 1Q of this year, as a percentage of total sales, EVs was 6%, which doubled year over year. So I think the trends are still in place.
When I hear enthusiasm, Gabe, I think froth. Do you really mean froth? That some of the froth has come out of these names?
Enthusiasm, froth, tomato. You could argue, look, the valuations are certainly a bit stretched coming into this year. And again, a lot of the stories are really plays on longer term themes, but we think those themes are in place. And yeah, so maybe you did see just a little bit of the multiples compress a bit. But like I said, I do think the long-term theses are in play, are intact.
Edison, you cover the Chinese EV makers, and so I'm wondering what your take is over there. I mean, is their fates dependent on the success or failure of Tesla in the Chinese market?
Yeah, so thanks for having me on. So I would point to two things, specifically on China EV, and it's sort of classified, I would say, in one bucket as competition, and the other side would be a rotation. The competition in the Chinese EV market is by far the most intense of any geography. If you look at the Shanghai Auto Show, there's literally every tech company in China coming up with an EV. Some of them are partnering up with local competitors, and they're releasing models fairly soon, some less than a year away. And so the competition that's coming has created a lot of anxiety among investors. And this is translating into fairly weak stock sentiment. The other issues I would say are a little bit more tactical. If you actually kind of just look at the market cap of NIO, XPeng, and Li, and you can even throw Tesla in there, and then you compare it against the traditional automakers. So, GM, Ford, Volkswagen, Daimler, etc., Hyundai, you can actually see there's been a big rotation from the new upstarts to the traditional incumbents. And I think that's a reflection sort of competition, but a different sort, which is the existing OEMs fighting for their lives and actually putting forth very credible plans for EV future, investing tens of billions of dollars. So I think you throw those two factors together, and then you had 2020, which was a year where all these stocks went up like crazy. It's kind of how you end up right now.
Yeah.
And then, we'll see what happens. It's a battle. I think it's truly a battle going forward.
Yeah, certainly GM, for instance, has really won a lot of favor for their EV portfolio. Gabe, last question to you, and unfortunately we're almost out of time here. But when you take a look at your space, a name like QuantumScape, and I hate to pick on them, but they are reporting after the bell. They were the target of a short seller report. It, and it wasn't the only one, a recent de-SPACed company. At least 3 de-SPACed battery technology or EV companies were the targets of short seller reports. And I'm wondering if there was a certain amount of, tourist money going into this sector, because this is a sector, particularly when it comes to battery technology, it's harder to understand. I mean, it's not intuitive. There's a lot of complicated things going on. It all sounds great, and it may be the wave of the future. But in terms of understanding the actual technology and what companies have right now, they're easy targets, too, for shorts.
Yeah, Melissa, it's definitely a good question. As you mentioned, battery conversations could certainly be quite dense for investors, particularly when you get into the chemistries around solid state and the potential there. Obviously, solid state has been or has showed promise before, and so investors, I guess, are questioning if this time is really different. And I think that, again, the issue with QuantumScape is the technology looks impressive and attractive, but it's still quite a ways away until commercial applications. Or you're seeing the technology in vehicles on the road. And the company's been upfront about issues potentially with manufacturing and scaling the technology. But again, with first revenue not really expected until 2025, you could argue for shorts it's an easy one to pick on.
We believe 2021 may well remain bearish for growth stocks like NIO for quite some time. But we also believe that bear markets are where the seeds of maximum gains are planted. So, those who invest in 2021, with the right conviction and patience, will probably see the maximum gains on their investment over the next 3 to 5 year horizon. The extraordinary lows of 2020 are already a proof of that in front of us, and in the end, after a few years, we may feel thankful for these lows of 2021 as well.